Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is Kelvin Wong, Market Strategist at CMC Markets. Kelvin, thanks for coming in again.
Yeah, hi, Brian. Good to see you again. Yeah.
Now, Kelvin, before we get your insights, let's take a look at how markets have performed this morning. Now, we'll start with the SGX, which is at 2908.14. It's down 0.42%. Bursa Malaysia is at 1,591.77. It's down 0.22%. Across the region, we've got the Nikkei, which is down 0.22% at 30,224.56. Shanghai is back on today. It's up 0.39% at 3,669.42. The Hang Seng is down 1.16% at 30,723.83. ASX 200 is flat at 6,885.3. And rounding off, we've got the Kospi, which is down 1% at 3,102.29. So, Kelvin, what's your view on how markets have performed this morning?
To me, if I look at the price action since the start of this week from the Asian markets as well as the US major stock indices, to me, it seems to be more of a kind of a minor consolidation rather than a kind of a topping process that is taking shape right now. So to me, if I look at it from a technical analysis perspective, and as well as later we'll discuss more about yesterday's release of the Federal Reserve meeting, the medium-term uptrend for the major stock indices remains intact for now.
Okay, let's talk about that. You know, the meeting minutes yesterday. What's your view on how this has impacted investor sentiments?
So if I look at yesterday's Federal Reserve meeting, it seems to me that overall, the Fed is still kind of pretty dovish in a way that they're still saying that, okay, let's have a kind of a wait and see approach. We do understand that inflation right now across the globe, even the US, has started to trick up steadily in the last 1 or 2 months based on the latest CPI data that was seen across the globe based on various countries. So, but however, the minutes itself is telling us that, hey, let us observe for a few more months or a few more data points just to make sure that it's not a kind of a one-time off shoot at inflation. So to them, to me, is that they want to see a persistent increase in inflation before they start to temper their bond purchase, which i.e. means that they're still willing to provide this kind of current liquidity into the financial markets, which to me in the medium term is still positive for risk assets like stocks.
But obviously now this specter of inflation is going to have an impact on Treasury yields. Are US rising Treasury 10-year yields a concern for markets?
Yes. So to me, if we are looking at, it's definitely a concern right now because of it will increase the cost of borrowing for certain sectors. So to me right now, what you're saying that this rise in Treasury yields, not even US, in fact in bond yields or sovereign bond yields across the globe, like what we see in Europe as well and certain parts of Asia, you're getting a sign of reflation. So it's more like a kind of a recovery team play that what we see last year, where across the globe we are kind of a torment or damaged by this COVID-19 pandemic. So it's more like a recovery play. So definitely that certain sectors will actually outperform, certain sectors will underperform in this rising yield environment. So sectors that actually outperform or stocks that outperform we definitely will be banks because of the potential increase in net interest margin via the 210 year spread that is also increasing steadily as well. And also a rising yield due to reflationary play. So we'll start to see a decade long of underperformance, which is commodity-related stocks since around 2010, 2011, they've been underperforming against the big tech. So I do expect these nuggets to actually catch up as well.
Okay, interesting. So nuggets to watch out for the banks and also commodity-related stocks.
Yes.
Now, speaking of commodities, oil markets have been up 18% in the last 3 weeks. Now, but that's mainly driven by extraordinary circumstances due to weather that has caused a supply squeeze. In fact, taking out almost 40% of US production. But what's your view on oil prices, beyond this very short-term squeeze?
Yeah, so to me, right, if I were to look at this short-term squeeze that was seen late last week, that taking oil prices up to, let's look at WTI, the WTI crude oil, about 60 per barrel. So right now, right, even though prior to this short squeeze, right, it's very, we will start to see, I would say, an increased tremendous amount of speculative punts on WTI crude prices, including Brent crude. So if you look at the Equipment or Traders report that's out last week, so net bullish position by those, I would say that speculative players, talking about hedge funds, is actually up by a high of close to 28 months. So that's a kind of a extreme positioning on the bullish side of the story for WTI crude. So right now, it actually is also coming very close to a major resistance at 75.70 for WTI. So and also, if WTI will continue to increase at such a pace, right, it could actually increase supply in the medium term after this weather has really passed in US, for the US oil shale gas drillers to actually come back into the picture. So that could actually see a bit of stabilization once it hit around the 75-70 level. And also there's a risk of this kind of unwinding of this extreme bullish speculative position in crude oil prices. So nevertheless, in the shorter term, perhaps right now we may see a bit of consolidation below 75-70, but definitely not a kind of plunge from here at this level as well. So I'm expecting a support around at 50 per barrel for WTI crude oil.
Now, Kelvin, thank you very much for your insight.
Sure.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check us out on www.biztech.asia for business and technology conversation.